Ladies and gentlemen, open banking pioneers, how you all doing? And a big warm welcome. Thank you for tuning in and joining us around our campfire. Now, I do hope you've all taken Nick's LinkedIn advice and you've all brought your own marshmallows. I had a sneaky peek at the registration figures, and I would like to say a huge, big hello to our open banking pioneers from Brazil, Japan, Kenya, Lithuania, Asia Pac, and Canada and the States. The list goes on. We are now a truly global community. So thank you, and a big warm welcome to everybody, particularly those who it's the first time. So it's important for us to keep our community connected. So we work very hard behind the scenes to do just that, especially right now for our OBE heroes. And that's why we just have one OBE campfire a month on the third Thursday. Now, I would like to thank everybody who's contributed towards shaping this afternoon's theme. Could COVID-19 boost open banking payments? Overwhelmingly, this was what everybody wanted to talk about. My inbox was just electric with it. So I'm privileged to gather some of the best to share their insights and to honor our commitment, their use cases on open banking payments. Now, payments is in my DNA. Years ago, I was the founder and former chief exec of a prepaid card issuing bank. Now, we were the first to have a license from both Mastercard and Visa. Now, I'm genuinely excited to see how open banking payments will transform and help our amazing sector's growth trajectory. Now, I believe it's going to be stratospheric. However, it's what you watching think. So please join us on Slido and ask the panelists questions. So come on, please, don't be shy. Please get those questions and Chris will ask all the panelists. And to make it even more interactive, we have our polls. So please have some fun and play on the polls. Now, you can actually already see the super talented Karina is already beautifully capturing what we're going to talk about during our time together. And at the end, we'll actually post that on LinkedIn for you all to see. So I am absolutely thrilled to bits to introduce our guest host, Chris Skinner, who is deliciously provocative. And now he's not actually expecting this, but I thought I would give his new book a plug. So if you haven't already bought it, please rush out and get Doing Digital, a very appropriate title given where we all are now. So we've gathered some of his good friends around our campfire. So Chris, please do introduce them.
Thanks, Helen, and welcome everybody. If you wonder why I keep looking over here, it's because the Slido question panel is to my left, and so it's not because I'm getting bored or I'm ignoring you, just so you know. And equally, this panel came about because Helen and I were talking just over a month ago with Tatiana and the team about maybe me getting involved in supporting some of the things that OBE are doing. And it was coincidental that it just so happened that I was in the middle of a research project around whether COVID-19 would have a big impact on cash and card usage and will drive people towards more mobile payments usage, for example, and other forms of payment. That research I've just concluded. I'll touch on it during the next hour. Also, thank you very much, Helen, for the plug of the book, which is also an area we'll touch on, in that I got fed up with people saying that banks are stupid and dumb. They are a bit stupid and dumb with technology, but that's because they don't have technology lead people at the top of their organization. That is changing, and I think this pandemic will change that far, far quicker. But I picked on talking to 5 banks around the world: JP Morgan Chase, BBVA, ING, DBS, China Merchants Bank, to find out the lessons that they could share with us around how they're doing digital. And what's interesting is open banking is a key part of that process, because open banking is all about being able to embrace third-party APIs and apps and analytics and leverage that to the customer. And if you can't do that as a bank, then you're failing the customer. And there's some lessons in there that we'll touch on again. But rather than me predicating what the panel will talk about, what I'd like to do first of all is have each of our guests introduce themselves and to give their view on whether COVID-19 crisis will accelerate the move towards open banking payments. And the best place to start is to do something alphabetically, so it's equitable, which means that Hugh from the Open Banking Implementation Organization, you're first.
Thanks, Chris. So yeah, hi everyone, I'm Hugh Davies. So I am a co-founder at a company called Ozone API. We provide great standards-based API technology to banks. And I've also, as Chris said, been playing a role at the Open Banking Implementation entity in the UK, where I've been leading ecosystem development. So quite a privileged position, sort of at the heart of the ecosystem, seeing the growth, seeing the use cases come about. And yeah, an interesting question. So I think since the COVID crisis, we've seen a huge sort of surge in innovation, actually. So I think we've seen a whole bunch of really interesting use cases focused on helping people confirm their eligibility for these different grants, for access to some of the lending, the lending options and funds that are out there at the minute. A whole series around sort of financial well-being. There's a bunch of use cases that have started to come to the fore in the wake of the COVID crisis. Payments has been in there as well. So I think we've seen pretty simple ones actually, but there've been quite a few use cases, particularly around charity donations. Obviously charities are losing a huge amount of opportunity to raise funds with big events like marathons and the likes being cancelled. But what we've seen, the most high profile was obviously, for those in the UK, Captain Tom. And Just Giving, as part of the Captain Tom fundraising page, also included open banking as a payment option. One of many payment use cases out there, but I think it was a really good and very visible use of open banking and was very successful. Is this creating a huge surge? I guess I've got a couple of thoughts. So I think what we're seeing with COVID is a real sort of a bounce or injection in innovation around a cause, which is great. I think at the same time, there's challenges for the industry. So access to VC funding and things like that is tough. Long term, for payments to really, really take off, I think one of the things that we need to do is get beyond just the regulatory foundations that have been built to date. So the banks and the ecosystem move beyond that to probably a more commercial foundation that sits on top of that regulatory minimum. And I think that will really open the scale. So has COVID been the catalyst that will drive significant long-term adoption? Well, it probably needs other things, but has it been a really interesting and useful boost in innovation in the short term? I think it really has, yeah.
Thank you, Hugh. It does raise some questions in my mind, but let's bring in our other guests before I start probing further. Jim from Mastercard, I guess people have heard of your company, but may not know you. Perhaps you can introduce yourself and your thoughts again on whether this crisis will speed the move towards open banking payments.
Yeah, thanks, Chris, and hi, everybody. Yeah, Jim Wadsworth at Mastercard, where I lead what we're doing on the topic of open banking worldwide. I should also say very proud to be the kind of lead sponsor of OBE, and thanks to Helen and team for putting these events together and so on, and thanks for asking me to come along today. Always happy to do that. Yeah, I mean, look, we're at the early stages of open banking. Let's be really honest. You know, I think most people would agree that, you know, over the long term, it's going to become, in its whatever form it takes, open banking, open finance, open data in due course, will become an important part of, if you like, the whole financial services and adjacent ecosystems. Has one of the silver linings of the crisis been to help stimulate, accelerate open banking adoption, and within that open banking payment adoption? Well, maybe. I think what it certainly is serving to do is we're all having to learn, if we didn't already know how to, all having to learn how to use tools like the one we're currently talking to and through. You know, it might be usual for folks in corporate life to use things like Zoom or the equivalent, but that hasn't always been true for all of the population. But just keeping in touch with one's family, or for teachers delivering online learning, stuff like that. A very large proportion of populations have had to get more comfortable with more digital tools. And in that sense, I'm sure that, you know, within the context of banking and payments and other such services, you know, will that help overcome resistance, if you like, to trying out new stuff, to adopting new stuff? Yeah, probably. Do I think that, you know, the few months we've seen are very difficult times that we're all going through worldwide, you know, has that made a measurable difference? I mean, yes, there are some examples like some charity giving use cases, which is great to see. I think the bigger picture will be it's accelerating adoption of further adoption, of digital tools, and therefore open banking will benefit from that over time.
Yeah, I agree, Jim. There's definitely a behavioural shift taking place, and you know, I blog every day at Finanser.com, and if you didn't see, I blogged the other day about the end of the office. Jez Staley from Barclays has said that the idea of cramming 7,000 people into one building every day is just ridiculous. It won't happen in the future. And Twitter's told its staff to work permanently from home forever. So there is definitely a change of behaviour here. I guess, Jonathan, you know, again, introduce yourself, but coming from Ant Financial and Alipay, you're seeing what's happened in China from your colleagues firsthand, and you know, you can maybe give us some signs of, you know, how they're coping with it, but equally, obviously, a little bit about what Alipay is doing in Europe and what you're doing here.
Sure. Yeah. So, hi everybody. I'm Jonathan Quin. I set up a business called World First back in 2004. And built it up, and it was acquired by Ant Financial last year, which some of you will know better as Alipay. I think, so maybe I can touch on those 2 points. I think to look at the Chinese example, I mean, I think some of you will be very aware of the prevalence of Alipay and WeChat Pay and digital payments in China, but for those that aren't, it is truly staggering. Alipay has 900 million users, and it's actually quite difficult now to spend cash or even use cards. I think that's one thing that trips people up in China. They go out there and they think, well, I've heard there's no cash, but I'll be able to use my card. And you get to the end and they kind of look blankly at this piece of card that you're trying to hold in front of them, and they want WeChat Pay or Alipay. So I think, and personally, I think that is the direction of travel. I think it's very hard to believe that we're going to go backwards in that. So in terms of what's coming, I think that's probably relevant. Interestingly, they use QR codes there as opposed to contactless. Some of you will have seen just this week that PayPal's announced it's going to have some QR codes as a means to enable social distance payments. So you can actually read the QR code from quite a long way away. But I think during the kind of COVID period, that has been a catalyst for increased digital and kind of open banking type payments in China. And again, I think that's happening to some extent here. Certainly, obviously, Alipay, you can use online or offline, and online usage definitely gone up materially. I think maybe just for your second point to think about the European perspective, I think that if you think about a traditional business model, you need to generate awareness and then you need to convert people. And I think things like the Just Giving offering open banking and some of the other sites that we're going to, both as a consumer and as a business, I'm seeing more of it in the public domain, and I think that brings people into the top of the funnel. Then for the conversion piece, we've got to make sure it's seamless and frictionless and easy to use, and it builds real value. And I think you're going to touch on that later. But so I think that this is the beginning of a catalyst, but I think we need to see more to really see that acceleration, so that the average person in the street knows what you're talking about when you say open banking.
Thanks, Jonathan. And I'm glad you mentioned PayPal's entry with QR codes, because I've now rebranded them AliPayPal. Nick, we've known each other a while, and you're looking very relaxed in your Jersey home. So having said that, you're globally creating new businesses all the time, the latest being RTGS.global. How have you seen things changing in the last couple of months?
I think there's a curse, isn't there? We live in interesting times. I wonder where that came from. But it's fascinating really to stand back and watch what's happening as a result of a global pandemic. An interesting aside is that in 2007, before the global financial crisis, RBS, that famous bank that we all love, the only thing that they had in their annual report as a risk was a global pandemic. And I know a number of people have been going up to Guggerberg trying to find that report to find out how we get out of the current crisis that we're in. I think the reaction to coronavirus, both from a government point of view and an economic point of view, has been quite stark. We've all gone into lockdown. We've all gone into shutdown. And that's created a number of challenges. I think the the biggest challenge has been, how do we all survive, and how do we talk, and how do we do all the things we used to do? And it was interesting earlier on, sort of referencing the fact that, you know, we all now usefully use Zoom, Teams, Google, whatever. And it's not just us, it's not just the people on this call today listening to us. It's their children, their grandparents. Everybody has gone through a massive digital education over the course of the last 8 weeks, the likes of which we've never seen before. You know, I remember in 1994, we built the world's first online shop in Jersey. And we had 7 people who had access to the internet. Now, that was not a very big market. Now we've got millions of people connected, millions of people using technology and being forced to use digital technology because they're in lockdown and they're at home. And in our pre-call to this, I came up with a phrase which caused all of you to laugh, and hopefully I'll hear out of the window laughter from around the world, when effectively, you know, COVID-19 effectively has created almost like a digital enema. We've had to look at what we do. Everything's being changed around in relation to what we do. And there are massive, massive opportunities occurring on a minute-by-minute basis as this crisis moves forward. You know, cash usage has dropped by 60%. You know, do we want to go back to a cash environment? Probably not, because where's the cash been? What that does is say, okay, fine, we've been struggling for years to remove cash from the marketplace. What is going to replace that? All right. How does open banking support that cash? But it's not just the transactional element of cash. It's how do we secure the transaction? How do we deliver identity, verification, credibility associated from a transaction between buyers and sellers in a new way, using the environment that we now live and operate in? And I think that as this pandemic carries on, and you know, everybody's hoping that we're going to come out of it shortly, and you know, definitely Chris, you and I and Helen are hoping that pubs open again soon. But you know, let's assume this runs on for another few months, and then let's look at the worst, that we have another spike and we all go back into lockdown again. You know, that's a dreadful thing to happen, but that's only going to accelerate the adoption of the digital technologies which people will have to use because they haven't got the alternative means of doing anything. So I think, sad that it all is, I think that the benefit of this is that we've been forced through a global market education process, which would have cost trillions had we tried to get it done. And I think that the alert, bright businesses coming out of this, who will not be operating from offices, are those that will be the winners at the end of this crisis.
Thanks, Nick. And what's interesting from my side is, again, we might touch on it, although it's not so relevant, I don't think, is travel and hospitality and conferences, because you know, we're conferencing online and I'm now doing a lot of digital keynotes. And the difference to me is it pays a lot less, but it only takes me an hour rather than 4 or 5 days traveling there and back, which in some ways, therefore, is a great benefit for me. But let's introduce Todd, last but not least. And I'm glad that your first name is the same letter starting with the name of your company, which is Token. Todd from Token, welcome.
Easy to remember. Thank you. Thank you, Chris. Well, hello, everybody. My name is Todd Clyde. I'm the CEO of Token. And what Token does is we provide faster, cheaper payments for merchants, and we enable new payments propositions for PSPs. So basically, we're using open banking APIs to create a pan-European payment capability that simply settles over the bank rails rather than the credit card rails. And our mission is to kind of advance the future of payments by putting a bank in every app. So do I think that COVID could boost open banking payments? So I do agree we're definitely seeing an increase in open banking payments. And I believe we're going to hit an inflection point this year because the APIs have stabilized, much like we saw an inflection point hit data and data use cases about a year ago. But I don't think it's a result from COVID. Rather, I do think this is being driven by the readiness of the APIs and the improvements in the user interface. I've been over here for 3 years. I know you guys all been in this for a very long time, but we all remember what that experience was in the initial payments and data access, and there's been a dramatic improvement. So we are seeing an uptake. We do believe an inflection point is going to hit. That's due to the readiness of the ecosystem. That said, so I do agree with Jonathan. Jonathan said this environment has created a digital awareness. Jim and Nick both talked about a trend towards digital. I like that phrase, the digital enema. But I also believe that COVID is going to improve the business case for open payments even more. I think as a result of this pandemic, it's likely that there's going to be higher fees on cards to recover recent losses. I think there's going to be higher reserves and longer settlement terms from acquirers, and because they're all going to have to be prepared that this might happen again, and this might be a regular occurrence in our lives. So in contrast, I believe that the savings of open payments is going to drive this to the top of everybody's agenda, and that's something that we're benefiting from in this environment.
Thanks, Todd. And just in case you haven't got Slido in front of you guys, there is a poll that we're running on Slido. What is the biggest barrier to scaling payments initiation? User experience, bank API performance, merchant uptake, or consumer education? We'd like you to take the poll. And equally, you can also ask any questions during this discussion and leave your questions there, and I'll try and bring them up during the course of the chat. I guess to begin with, I'm going to start with you, Todd, and then Hugh and Jonathan, because I kind of wanted to get a perspective around what you're seeing around the world, particularly obviously starting in Europe. And from my side, I got a very interesting report the other day from a company called SaltEdge that has been testing 2,000 different API initiation experiences across Europe in 31 countries. And their report came out and said that most countries are pretty good at accepting open API requests to the banks. UK leading, in fact, 97% of UK banks accept open API requests. But response rates are dramatically different in that Czech Republic, for example, are in the top 10 countries of Europe, but the response rate is only 30%. So you can send a request, but you don't get anything back, which is pretty useless, really. Todd, how do you see things? You need to unmute.
Thank you. Very similarly, the UK, the deadline was January of 2018 for the CMA9 banks to have APIs. 50% of those banks missed the deadline. After they came live, it was a full year after that until data APIs were stable. It was a full 18 months until payment APIs were stable. But now there's 400 million data transactions, 400,000 payment transactions in the UK per month. So I'd say that's a model that the rest of Europe is going to follow. Poland then had the second deadline, and Poland is now the most available and the most stable second country. And then we do also measure the availability of APIs in all the other countries. Germany, the Netherlands, Sweden is probably next. But again, if you look at the deadline for those banks was only 8 months ago. And if you apply the experience in the UK over that, half of them missed the deadline. We did a study as of September deadline, only 15% of the banks were fully compliant in production at that point in time. But across the board, what we're seeing right now is really from the merchant redeeming to the bank responding is an 87% success rate. And when you measure that end to end, it's a little bit lower. But my point, Chris, is sure there's still some difficulties in the networks outside of UK and Poland, but banks aren't slowing down their production of APIs. They are improving and they are stabilizing. They are being rigorously tested. And so I believe it's just a matter of time, like in the UK, that it will become a viable alternative network.
And just before I come to Hugh, from mid-March, when Europe really got into the sort of depths of this pandemic, have you seen, Todd, significant interest change in the banks adopting open banking and APIs, or is it very much that they've just tried to keep the doors open and this is still on the back burner?
Did you say Hugh or Todd?
Todd.
Oh, so the banks have not slowed down their complying to the regulation, and they continue to produce their APIs. Had this happened 6 months earlier, we might be in a different situation. But all the banks were live, and now they're working out on testing them. So we do see APIs are live and operational. Volume is starting to happen. What I do see starting to slow down is many of the banks were looking at the commercial APIs. So how do we go beyond the bare minimum of compliance? how do we look at enabling more sophisticated payments like variable recurring payments, subscription payments, sweeps, installments. I have noticed a bit of a slowdown of banks moving forward on that project. But interestingly, so we have 2 banks that we enable them to take a PISP offering to market. So that we basically white label token end-to-end to offer a new capability to their corporates. And both of those banks had to re-justify the project in this environment. And both of those banks re-justified it as strategic at this point in time. So kind of tells you that as to comply, they're sticking with it. To create a new offensive proposition, they're staying with it. To move beyond the bare minimum capabilities of the compliance, I've seen a little bit of slowdown on.
Thanks, Todd. Hugh, again, you heard the questions I was asking Todd. You can probably add some more insight as to what you're seeing, and equally specifically, I guess, what are the areas where open banking is really making the biggest bang for the buck in terms of impact?
Yeah, so I guess just to build on some of the points Todd was making. So I do agree. I think there's a marked difference today between some of the market metrics and the performance we're seeing in UK versus mainland Europe. I think that's partly because of the UK started earlier on the journey. The CMA order started earlier than the PSD2 implementation. I think it's also down to the way the market approached implementation. So the industry worked together to create a common standard that was implemented more effectively. Across Europe, you tend to have much more fragmentation of standards. So it's harder, I think, to integrate to all of the banks across Europe. So further ahead, I think with a more coordinated implementation approach, that all made a difference, and we are seeing it in terms of the real usage numbers in the UK. So API call volumes grow sort of broadly 30 to 40% month on month. So the market usage doubles every quarter. Now, a lot of that's account information calls, but as we said, as Todd said earlier, and as we talked about, we're starting to see the real payment use cases start to become much more visible at the moment. I completely agree with Todd though. So it's important to understand we are still at the kind of end of the beginning, and the benchmark to date has been what has the regulation asked for. So a lot of the APIs are delivered to meet those minimum requirements. Now, I think as a much more commercial market starts to build on top of those APIs, as banks start to create more functionally rich APIs to enable, as Todd was saying, the variable recurring payments, which is one of the things we've been working on developing at OBIE, identity-based propositions, more options around that authentication user experience. It doesn't have to always go back to the bank, and put a commercial framework around that. I think we'll then see the economics and the demands of the demand side drive a significant uptick then in terms of the availability and the performance and the functionality of the bank APIs. Interestingly, I guess the question started around what's happening around the world. I think many of the markets are now looking at, so those markets that are taking a regulatory approach are looking at how do they really leapfrog what's happened in the UK and Europe, but also look at some of the learnings from the Asian markets. And I'm sure Jonathan will have some really interesting views. But Brazil, just a week and a half ago, the central bank, I thought very interestingly in the context of COVID and central banks being under a lot of pressure to focus on economic recovery and all of these things, went full steam ahead with rolling out the open banking legislation. I thought that was a really bold and brave move, recognition that a good digital economy is a real asset at this point. They, I think, looking and taking a lot of learnings from the markets in the UK and Europe. So it'll be a much broader scope than the UK. So all financial services product types, not just current accounts and payment accounts, with concepts of reciprocity to drive a more open and commercial market. So I think we'll see the market grow differently. And what we see, if you look at, again, places like India, okay, it isn't called open banking in the same way, but the UPI model, I mean, that's 4 years old now. We're seeing over 1 billion transactions a month pretty consistently. It's got through some of those first implementation hurdles. There's some common standards being applied. there's some real big demand players with some great use cases and great user experience, and we're seeing there the volumes fly. So I think there's some certain characteristics that have made the UK a little bit unique in Europe. But I think there's a next stage, which is now that sort of commercial layer that will really unlock a lot more potential.
Yeah, just before I come to Jonathan, I mean, I'm a big fan of what India's achieved, and I saw a stat the other day. I can't remember the exact numbers. It was something like 2010, 36% of Indian citizens had bank accounts, basic bank accounts. Now it's 82% in 2018. So just in 8 years, thanks to the India stack and the things they've been doing with technology, it's an incredible story. But one of the things I wanted to touch on before I ask Jonathan a question, Hugh, is right now I've seen so many different standards and implementations of open APIs and open banking. Every country is uniquely different. And in fact, almost every bank is uniquely different. Are we ever going to get to the stage that as a third party, I can just create one interface and send a call with one call to all banks across Europe, for example, or even across the world?
So I think harmonization of standards is certainly a goal, and driving that interoperability, we know in a payments industry is really critical. Actually, if you break down the sort of anatomy of standards, in certain areas, I think that harmonization is starting to happen. So at the security layer, so how consent management works and how the connectivity between banks and third parties. Actually, a lot of the standards now are using exactly the same base foundation, which is the OpenID Foundation's FAPI standard. So FDX has that as the baseline. The UK Open Banking Standard has that as the baseline. I think a number of other standards that don't have that level of security model will move to it. So we're starting to see harmonization there. I think what we'll see at the functional level, so what products are available, the data sets and things like that, we might see a little bit more fragmentation before we see harmonization, because again, Brazil, for example, if their scope is including pensions, mortgages, investment products and things before, say, the UK is, that it'll need to expand to cover those different data sets. But I think then you get a library that can be pieced together. So if you have a common set of security protocols for connectivity between parties and for consent management, then you might have some different functional libraries between markets. I think you start to move towards harmonization. And for me, it's that consent and connectivity layer where the harmonization is most important. And we're seeing that with the great work that the OpenID Foundation and others are doing. So I think it's a better situation than a lot of commentators and people suggest. But the fragmentation is certainly still a barrier. There's more to do for the industry to really make sure that we get interoperability.
Jonathan, I mean, obviously China's more advanced than Europe in dealing with COVID-19. It's 2 or 3 months ahead of where we are, I guess. And I know from some of the headlines that Ant Financial and Alipay and Alibaba have seen open banking platforms that are offered in China gaining a lot of traction, particularly in the last few months. But also mobile payments have probably had some impact. Can you tell us a little bit of the story of what you've heard from your Chinese colleagues and how maybe we could learn something about that in Europe?
Yeah, sure. So I think open banking, funnily enough, isn't a particularly commonly used term in China, but the spirit of what it's trying to do is quite widely accepted. You talked about I think you talked about the fact that a lot of banks are on the kind of bare minimum, the kind of regulatory minimum. And I was talking to a friend who runs one of the UK high street banks, and about a year ago I was talking to him about this, and he said, well, we're not going to turkeys vote for Christmas. And I think that that's because it's seen as a threat, not an opportunity. And what I think Alipay has done is, a lot of people think Alipay is the primary provider through a lot of its services, but actually almost all of it's done through partnerships. Its kind of core strategy is to cultivate local partnerships and kind of work with financial institutions to provide this multitude of services that they provide. And so I think if we can sort of change the rhetoric in Europe from this is a threat to this is an opportunity for you as the provider of the bowels of banking to access markets and segments or niches which you can't on your own and won't be able to prioritize the resources to provide, and still hold that core account or infrastructure at the back end, then I think then hopefully we actually and then hopefully they're self-incentivized to think that actually this is an opportunity and we're going to carrot, not stick. But I think that we're a bit away from that, because I think the kind of overactive amygdalas of the people that running the banks are very fearful and don't see the opportunity. So I'm hoping that, you know, that some of the early examples maybe do follow more the kind of Alipay model of, that will be a distribution platform for you, and you're still going to get the you'll get the business. And, you know, so Ant's done lots of that with insurance and lending and even governments, you know, councils and so on, and to provide a way for them to more efficiently collect funds or offer their service on a central platform. And then actually, once they get their heads around that, they're not so directly competing with the person next door. They're for like real estate on people's phones or something, that they've got a portal through which they can access 900 million users, and then it's about partnering to provide the best service to the customer.
That's my BBC News clip.
Yeah.
Live action. I guess just building on that, Jonathan, specifically, I've seen quite a lot of banks in China adopting the capabilities of Ant Financial. And one of the reasons why I like Ant Financial so much, because you starred in my last book, Digital Human, is because they really understand what I would define as the platform approach to open marketplace implementation. And the way I define it is the front office is all about the user experience through the apps and digital connectivity. The middle office is all about the APIs and providing the link between the front office user experience on digital devices to the back office data analytics about what they're trying to do with their lives. And one of the things that I use in all my presentations is one of the slides that I stole from Alibaba and Financial that actually shows the platforms are things like Alipay, but also the data analytics is Ali Mama, because Mama looks after Baba. And then the front office is all the super apps, social, commercial, financial. Is that well understood within China? And how come we haven't seen that well understood over here?
Yeah, that's a really interesting question. I know you'll think I'm biased, but I have genuinely been impressed by Ant as a business. I mean, there's things that I thought we were doing quite well, and then I kind of got to know them over the last 14 months, and they're just kind of up a level. And analytics, as you say, is one of those. I thought we had a pretty good kind of analytical overview of our customers, and then now we've got this pure real-time, deeply kind of data-driven approach, and we've kind of learned that from them. And there's quite a lot of things, like even in terms of the sort of values, like I've never seen a business that so kind of lives its values, and the number one value is customer first. And if you'd asked me a few years ago, I'd have said we put our customers first, but the level to which they kind of really follow that, you know, you don't go through a meeting where that's not raised, and it's that kind of I think Jack Ma calls them one of their 3 secret weapons, that it's the depth to which they follow that values, and this kind of passionate focus on customer value and tying together the whole business. So customer facing piece understands what they're doing and looks after the customer, and everybody's kind of geared around that. And then the other parts of the business are kind of fully supporting that, and the other parts of the business see their customer as the part of the business is facing the customer, so they're also thinking customer first. So I've definitely learned a lot. That I think I'll have all my life. I think it's I definitely think we could learn from how they run their business.
Thanks, Jonathan. Jim, maybe we can build on the themes we've started with, but specifically talk about it more from a cards and payments perspective using mobile services. I mean, what have you seen both from an open banking perspective, but also from card within app purchases changing behaviorally in the last couple of months from the stats that you're seeing?
I'm not in a position to comment on card within app. So I'm afraid I don't sit in that part of the business. What I would say is that whether you're looking at open banking services, or for that matter our own pay by bank app capability, the pace of conversations, if anything, has accelerated over the last period. Whatever the reverse is of people hunkering down and kind of battening down the hatches, whatever analogy you want to use, quite the opposite of that. So I think I'm seeing see people leaning into the digital opportunity as a whole when it comes to the supply chain. In terms of activity, real customer activity, frankly, we're still early stages. As Hugh said, the UK is growing rapidly in terms of usage, both payment and non-payment use cases. Mainland Europe has some ways to go to catch up, frankly. But equally, if kind of looking at, we've touched on India and China. Arguably, after India, perhaps the US is the world's biggest open banking market, and it's done that without the benefit of material regulatory intervention anyway. And the data there is quite clear. Things like, I guess because of interest rate changes, data on remortgaging is grown significantly, and one of the key ways that lenders conduct their underwriting processes in the States, complementing that which they get from the credit reference agency community, is using open banking data. And we're seeing significant growth of that, catalyzed by interest rate changes for sure. And from what we can see, same sort of stuff is happening certainly in the UK. That's obviously not payments transaction, but it is using the open banking rails, the AISP usage. And I think that's kind of almost natural behaviour in response to something which happens to have been catalysed by the crisis.
I mean, just before the crisis hit, we started to see quite a lot of movement towards some of the fintech players partnering or even being acquired by some of the traditional players. How do you think that might pan out? Because obviously it's very difficult when you've got a infrastructure that's a decade or half a century old to become an open API player. I know that from all the banks I talk to, their digital infrastructures are pretty abysmal, to be honest. How can that be refreshed? And do you think it's that they have to transform and you have to transform your operations, or do you buy something, or do you build something new?
I mean, I think probably most of the large players are doing all of the above. Combinations of partnering, renewing, acquiring sometimes. I think everybody is doing bits of the same depending on their particular circumstances. In the UK, even before the regulations came into play, HSBC was one of the first, the big players to launch something. They did that through partnering with smaller, nimbler FinTechs, and those relationships have progressed and been deepened. We've partnered with some firms, sometimes on a commercial basis. So, in the spirit of disclosure, with Token, with Todd and his team, and that's, I think, a very productive relationship for both of us. And also partnering with some other folks, and we've built some things ourselves. I think that's not untypical for all of the players. You try to kind of find the best way through, and there are some who've chosen a very deliberate strategy of we're going to build it all ourselves, and fair play to them. And some are succeeding, and some are probably finding that a bit harder than they thought.
Nick, I know you've seen our industry upside down, inside out, every which way, but win and lose. What's your thoughts on the way in which banks are participating in open banking and the opportunity that lies therein, and equally the whole fintech rise? And you've been a big part of that, launching ClearBank and now RTGS.global.
Yeah, I think it's interesting. When we started building ClearBank back in 2014, which was over an accidental cup of coffee, the idea was to effectively create a new neutral player in the marketplace, a new clearing bank, which didn't have the tech legacy of the incumbents. That was quite important to me because I live in the world of real time, and we needed to move away and lose forever the term batch from the Oxford Concise Dictionary. And so the moving to an environment, being able to build a clearing bank based upon a brand new real-time 24/7 by 365 tech stack was really exciting for us. And equally being laser focused in relation to the customers that we'd bring into that environment, who are all regulated businesses, be those from a payments initiation provider through to large building societies and banks. We work with all of them. But interestingly, yes, we have an API, but more importantly, we've matched that API up to something called banking as a service. Now, if a bank basically just gives you an API, that's great. then what are you going to do with it? How are you going to take that and turn that into a business and develop services which are consumer compelling? It's very, very hard. If you're with an organization that's running bank as a service, that moves slightly towards you, because effectively, can I have a sort code? Yes, of course you can. Will you offer me FCS accounts, deposit accounts for my customers? Of course we can. What can I do with my API? You can do with it whatever you want, because you consume all of these services in real time. So if you've got a clever way that you want to build something, please go and fill your boots and do that. And it's not a trade secret to say that today we've got 3.5 million businesses and consumers in the UK consuming open banking, bankers and a service via APIs through ClearBank. Now that we started that in 2017, so that's in 3 years. So, is that slow growth? I don't know. But is it changing things? Yes, it is. In the position, I'm very, very fortunate. I get to look at all the clever ideas of the customers of ClearBank, all right? And some of the stuff that's coming through is amazing about, how do we improve the way that we guarantee that we get the goods that we want to buy and the seller receives the payment that he wants to get. The card schemes, no disrespect, Jim, have been wrestling with that for a number of years, all right? And at some stage, they will also remove the phrase chargeback from their dictionaries. But you can do that by very, very clever automated escrow services. Some of those escrow services are going to become vital in the new world of no contact post COVID-19. All right, and there's firms already out there. Oak North are using escrow services to allow people to draw down mortgages on a Sunday. And why the hell would somebody want to draw down a mortgage on a Sunday? Well, if you go to most people and ask them what open banking means, most consumers, they assume that open banking means the branches are opening on a Saturday. They don't understand all the clever stuff that everybody who's listening to this program does in relation to APIs and all the various other things. So I think the whole market is now starting to move, but it's not just one thing, it's a combination of different elements.
With your experience, one of the key things has been that the back office services really do have to be unlocked. And you did that with ClearBank quite clearly, because there was no new clearing bank in Britain for centuries. But unlocking the back office, I think, is a criticality. It's what we see in China with Alipay, for example, that they're providing front, middle, back office flexibility through open banking platforms and services. How near do you think we are to unlocking the infrastructure of the financial industry, and why is it taking us so long?
If you, I guess I'm a boring person. Sit on a plane flying around. You read lots of books. Many written by you, Chris. But the reality is that many of the major innovations in the historic financial services markets have occurred as a consequence of horrible accidents. Why was SWIFT created? Why do we have the international messaging system? Because we had a financial crisis in 1974 called the Herstatt crisis. All right. In 2005, the European Union was looking to create competition in the European marketplace because they felt that open banking or more competition was required. They didn't have a clue that the global financial crisis was around the corner. What happened was the global financial crisis occurred exactly at the time when the first set of payment service regulations were coming into force. And so the players that were being forced to compete couldn't compete because they weren't capable of doing that, because they were all in trying to restructure and rebuild their own balance sheets. So I think there are a number of reasons why things happen, and you can say, oh, it's all a big conspiracy and all the rest of it. It's not. It's large corporations and their inability to adopt and move to change. But that is rapidly altering, in my view. With the emergence of cloud-based technologies, how many banks have put out press releases over the course of the last 8 weeks saying we are now moving to cloud? What's all that about? It's because they suddenly realize that they have got to move. They've got to put in better systems, have better disaster recovery and all the rest of it, and adopt these new technologies, so they're forced into it. The work that we're doing in RTGS.global, which goes live in 7 weeks' time, unlocks the global supply chain in relation to interbank finance. And we can enable 44,000 banks around the world over the course of the next few years to move international payments in real time. It's called atomic settlement, and it works. what we've been able to do is just to embrace the new technologies and apply that in a way that makes market sense. Because if it didn't make market sense, we wouldn't end up with customers, but we'd have some great tech. So I think that, the time is right. I think financial services and the incumbents have been very, very slow to adapt to the internet opportunity that we started talking about in, the mid-90s. A PDF on a smartphone is not digital banking. And where we're getting to now is a major change and a major alteration, if you like, in the way that technology is applied to financial services, and equally regulators are prepared to accept the change which they now see as inevitability.
Amazingly, we're already almost out of time, but I think we've got enough time for me to ask one final question of each of you, but your answer needs to be under a minute. And this time I'm going to do the order differently. I'm going to work from bottom to top, which means, Jim, I'm going to go with you first. Post-pandemic, when we talk about open banking and payments, what do you think will be the long-lasting change?
Catalyzed by open banking, I think, we won't call it open banking, but that phenomenon will be the norm in which we all, be that, as consumers or businesses, interact with our money. And, going back to Nick's point about kind of the branch, they will be open 24/7, but it won't be bricks and mortar, clearly. I think this absolutely is a transformation of how we will interact with our money.
Nick, I'll come to you now. Post-pandemic, open banking payments, what do you think will be the long-lasting change?
Just three things, Chris. Customer service and communication. That's what's going to happen. Everybody's going to realize that because of our exposure to digital technologies, we can communicate in hugely different ways. And then that's going to sort out those that have got good customer service and good communication. Those that have got that, and financial is a very good example of that in China, will win.
Todd, post-pandemic?
Well, a year ago at this event, the UK was only doing 40 million transactions data per year and per month, and now we're doing 400 million per month. Payments are only at 400,000 right now, so I guarantee you 1 year from now we're going to be talking about them being at 4 million or so, significantly higher. I do believe this inflection point is coming. 60% of the payment service providers that we have recently surveyed say they already offer or are planning to offer an open payments offering in 2020. And I believe as APIs have stabilized in the UK, they will stabilize in the rest of Europe, and you will start to see it take off.
Jonathan?
I think I'd echo lots of that. I think it's an acceleration of digital payments. I think I wouldn't want to be a cash provider at the moment. I think the acceleration of online ordering and mobile products. And I do think there will be an emergence of some sort of FinLife products in the West, which I don't think I could say at the moment truly exists. So FinLife to me is this kind of financial product that becomes a part of your life because it deals with all the parts of your life. And I think we'll see that to start to appear.
And only because we caught up a little bit of time, I do have to ask you one other question, which is Alipay was sponsoring the UEFA Euro 2020 Championship. That's pretty gutting for the team that's obviously been postponed by a year. But why and what is Alipay's strategy in Europe?
Sure. So Alipay actually, even I didn't realize this until quite recently, has been in Europe since 2012. Already partners with 120 financial institutions. In a number of ways, providing services for Chinese tourists traveling to UK and Europe. That's quite a big part of the business. And then also providing payment methods to collect money from sales in China and Tmall and so on.
Thank you very much for joining our call, Jonathan. Hugh, post-pandemic?
Well, quite a lot's been said already, but I think, I agree with the point that I think what we'll see here is just a recognition of the importance of a great digital API-based platform. Interesting, I think this is about, so we tend to talk about data or payments, or I think what we've got, there's now been an investment in delivering a secure API layer with a common consent approach, which banks can then leverage to make services available. I think this is the moment that Amazon had in 2002 when they had their API mandate. Everything we do must be consumable from the outside. So I think this is an opportunity for banks to deliver great APIs with a common sort of consent model that can be used as a platform for whether it's payments, whether it's onboarding to a loyalty scheme, whether it's booking a flight, whatever it is, that potential to start combining some information about me with some identity attributes about me and then the money as a result. It's not going to happen immediately. Again, this is going to need to evolve a little over time. But I think this situation now, as we've talked about with video conferencing and things, it's accelerating the importance of a great digital infrastructure. Banks have already invested in that. They can just do it across more products and with richer functionality. And if they do that well, I think this is a huge, huge opportunity for both the banks and the banking industry, but every other business that can build on top of that and build great end customer propositions around that access. So I'm hoping it will be a continued acceleration, as Todd said. I think we'll just see the numbers ramp. I mean, interesting, we've been talking in the UK a lot to some of the various different government departments, and they've got loads of challenges at the moment. They're going to have to reduce costs significantly. They're having to find more digital ways of dealing with new customers, whether they're onboarding to universal credit or these different schemes. That infrastructure is there. Actually, there's a great opportunity for the nation, for industry to grab hold of this and accelerate the pace of it. And I think we'll see that.
Most definitely. And I know that Helen's waiting to close the call. Thank you so much, guys. We could have talked for another hour easily. If anyone's interested in the research that I'm producing around post-pandemic payments, you can find me at chris@thefinanser.com or Chris_Skinner at Twitter. Helen, back to you.
Thank you, Chris. Wow. What brilliantly hosted, first of all. And you asked some superb probing questions. We had a really adult conversation. We could have talked for hours and hours, and maybe that's exactly what we will do. Maybe we'll have this panel back later on in the year. So a huge thank you, gentlemen, to Hugh, to Nick, to Todd, to Jonathan, and of course to Mastercard. Jim, it's been great to have you on a call. You very generously joined us. You often have said, being a sponsor, you want to take a back seat, so superb to have you here. I'm actually going to share my reflections online. I was going to share them now, but there's been so much content. I'm going to listen to this, I'm going to download it, and I'm going to share them online. Tatiana will also be posting the highlights. And if everybody listening could also share their feedback with us, we love your ideas. That's how we like to keep connected with you on LinkedIn. So that would be absolutely brilliant. A couple more thank yous, if I may, to all our sponsors. Mastercard and Token are on this call, but to everybody else that supports OBE, you help us make it happen. But also a big thank you to BigTech.global, Martin and Robin. You've done us proud, no technical glitches, so nice one, boys. And my last thank you would be to Dom, who is the talent behind all the digital media that you've been seeing during this call. So all that remains for me is to say that I wish you the very, very best of health and keep you and yours safe. See you soon. Bye for now.